Hello and welcome to the first episode of Momentum and Value Investing using math and statistics. In this series, I'll be showing you my algorithm's daily picks and my due diligence process thereafter. I'm planning on doing this at least once a week, time permitting, and I think you guys will learn a lot and maybe make some money along the way. Of course, this is not investing advice, trade at your own risk, and I will be disclosing my positions in these stocks. Of course, comment, like, and subscribe if you enjoy the video. So a little bit about the algorithm. It looks at 4,710 securities and looks for strong uptrends. This means that the stock has been going up over a specified time window and has minimal volatility within that trend. Monotonic is the term I like to use for you math nerds out there. So what I'm about to show you is the output of the algorithm filtered to stocks under $10 from February 5th, 2021. There we go. So this is a chart of the stocks that it picked for today, Friday, February 5th. And we can see that we're looking over the past 30 trading days, and we can see that all of these have pretty straight line uptrends. So next, we want to actually look through what these stocks are and why they're going up. So for the sake of time, I'm just going to go through the two that I liked out of today's picks, and those are going to be DXYN, which is Dixie, it's a carpet company, and then QD, which I think is really an interesting one that we're going to talk about quite a bit. I'll also show you some of the picks from about a week or two ago and how those are doing. So yeah, let's begin. So starting with DXYN, this is a DXYN. So this is Dixie Group, and they're a carpet and rug mills company. So if we look at just this chart on Google, over the past month we have pretty much a straight line going up, starting at $2.59, coming up to $4.30. So almost 100% return in the past month. Now, the next thing I like to look at, let's go to 6 months, and we can see that right around November 2nd, which was, election day, we can see that's when the stock really started going up. So I like stocks that, picked up because of the new administration. It's definitely, a good, catalyst for certain companies. And we'll get to my theory as to why this company is affected by that in a moment. I don't think it's because the Democrats are going to be buying tons of carpets and rugs. So if we go over to, let's see. If we just look at TradingView, DYXN, I spell it right. There we go. So if we just look at the TradingView information, and get this thing out of the way. Here we go. Okay, so we can see that this company has a $64 million market cap, and we have a price to book value of 0.88. So this means that just the straight value of this company, if it were just sold off, is actually more than the market price. So this is a really good sign for value investing, and essentially means that if this company were, say, bought by a private equity company at market value, they could instantly turn around and sell it for more than book value, or for book value. If a private equity firm bought this company at market value, they may be able to turn around and sell all of its assets and pay all of its liabilities and come out on top. So essentially, this company is really undervalued. And we can also see, we have pretty high earnings per share. When we go into the 10 the 10Q, it doesn't look quite like this. It's not quite this high, but you can see that this company is making money, and it's definitely a value stock. Now, going back to why it's been skyrocketing since Biden got elected. So one thing is, this is a bit of a coincidence. They had a good earnings report right around this time. But another thing that I'm noticing is value stocks have really been skyrocketing under the Biden administration. And I think one reason for that is the frothy valuations that have been, giving out the good returns up until now. People are a little bit worried that those might be hampered by regulation or an increase in taxes. But if you're buying, Warren Buffett style, a really good business, then you're in really great shape. So I'm finding that a lot of these value, what you'd say are value investments, are really rocketing up. And at $4.30 a share, obviously, the company is intrinsically worth more than that. So that's definitely a buy right there. Going back over here, the other company that piqued my interest was QD. So this is a Chinese fintech company. They deal in small loans, and I don't know too much about it other than the financials. And I'm always a little bit skeptical of buying into, foreign companies because, as an American, I can't necessarily see that it's outside. I can't see, oh, this company is being successful. Oh, I see ads for it online. So I always try to take international stocks with a little bit of a grain of salt, especially when they have really, really almost too good to be true financials. Now, get this. This company made $468 million in 2019 in net income, which is just crazy considering that the market cap of this company is only about 500 million. So that would put the price to earnings, near 1, which is crazy. Now, this is the only one filed with the SEC, so now we can look at their unaudited financial statement. Unaudited financial results. So we're going to take this with a very large grain of salt, but I mean, this company has existed since 2014, I believe, and since then a lot of not so legitimate companies have been discovered, so the fact that this one is still around is kind of a good sign. But anyway, we'll just skip ahead down here. Okay, 3 months ended September 30th, 2020. Now, we're looking at, these are in thousands, this is US dollars, $87 million of net income over 1 quarter. So, that's 87 times 4, if we just extrapolate it like that, that's $348 million of net income on a company that has a market cap of, I believe, around 500 million. And we can see the price to book of this company is even more outrageous. So that's something else I forgot to point out in that filing. If we look through the filing, we can see that they're, take it with a grain of salt. Shareholders' equity, US dollars in thousands, 1.6 billion. And so, I mean, that's, if this is true, this company is way undervalued. We see current assets, 1.7 billion. Current liabilities, 145 million. This company is, amazing from what I can see. Hopefully you guys can poke some holes in what I'm seeing. It's pretty rudimentary analysis, except for in addition to just the chart. Oops, I can't do that. But yeah, I mean, look at that. Just since this one has been since right about the beginning of this year. So one thing I realized later is that a lot of these assets are the opposite end of financial instruments. So money that they've loaned out that they expect to get back. And so balance sheets of banks and financial institutions are kind of reversed. So like the money they're holding as deposits would be a liability, but then loans that they're expecting to get back, those are actually assets. So the big risk with this company is whether or not there's a huge default. And Chinese credit, has seen a lot of booms and busts. So that's definitely one reason this company is so underpriced, or at least cheap. But yeah, I mean, so these are the two that I recommend out of that list. There's some other good ones for you to do your own research on. Just take a look at these. And there are, these do go up to about $1,000 a share. There's really hundreds of, the things that this code outputs. So if you guys are really interested in that, you should definitely let me know. So now I want to show you some of the companies that I picked out probably about a week or two ago. So one of them that my code pulled up is this one, Giddy Technology Holdings. So let's switch over to my phone and just show you my little test account. So I purchased this. I detected and purchased this January 26th, and we're up 16% since then. Now, let's get back to the due diligence on why I decided to buy this one. If we look on Robinhood, we can see just from their description. Okay, we see strategic sourcing and procurement software to enable confident, compliant spending decisions. Essentially, this is a software as a service company for municipalities. So Democrats get in, they spend more money. This company is going to get some of that money. But then if you look closely in here, it talks about their, what is it called? Their open counter service provides government permitting software to guide applicants through complex permitting and licensing procedures. I can definitely see that, seeing a boost from COVID, and it's just this product offering just looks really, really trick to me. And it's another stock, that I think it's a good sign that it really started skyrocketing right after the election. And it's hard to say a target on this one, but I'm just going to hold it. And then the other one that it pointed out was this one, Qmu, which is another Chinese company. Looks like I lost a bunch of money on here today. I put in very little, only $46, just because I wasn't, too sure about this one. But this is essentially like a Chinese. Actually, no, this isn't a Chinese company. This is a company that helps do live and on-demand video for enterprise. So obviously, COVID is going to be a good stock for that. But the fundamentals on this one, I'm not quite as sure on. I was more just counting on the momentum. But we'll see how this one goes. The last one it pointed out to me back then were these ARK ETFs, which, I mean, you could build this portfolio yourself, but, look at that line. Pretty amazing. So yeah, I mean, definitely do some research on these other stocks. I think these are some good picks, and, let me know if you guys want me to, keep doing this. I was thinking could even do it every day, and then we could also start talking about the code that goes into generating these reports, and we can also look at, the stocks that are more expensive that I'm not showing here. But yeah, I mean, that's about it for, this video on, looking for deals in the market using code and math. So yeah, I think, finding these value stocks is especially under this Biden administration, is a great way to but yeah, I think that value stocks and really anything that has good momentum, you know, for at least a month is going to be a good buy, as long as the due diligence supports it and there's no, it doesn't just seem kind of like a pump and dump kind of scheme. So if you guys found this interesting and you want to follow along with my stuff, please like and subscribe so I know to keep making these videos. And, we'll see if we can make some more money together. I think I'll probably, create a new broker and put maybe $500 or $1,000 in it and just trade, for the channel in there so we can see the progress. But yeah, let me know what you guys think. And that's about it. Happy trading.